Hello, welcome back to Foresight from 2020. I'm very excited about this next segment. I'm joined by Aaron Hasler, who's a managing partner at SkyView Partners, where we're going to dig into the art and science of growth through acquisition. This is going to be a very fast-paced conversation with a call to action where you'll be able to access specific actionable tools and templates to translate this into results. So right up front, Aaron, thanks very much for carving out the time for us here today.
Absolutely. Glad to join you. I apologize for my pandemic-related hockey hair, but I figured that was the spirit of the Canadian team here.
Yeah, I know you're excited about this primarily because we're about the only group of people who are north of you, right?
That's correct. Yeah, absolutely.
I've got
I
a
think we
real
still end up with colder weather, but I like where you guys are at. Absolutely.
I've got a real fondness for your part of the world. You've got so much going for you down there, and I can't wait to get back and see your team, but also some of our many relationships in and around the Land O'Lakes there. So again, thanks very much. And I'm excited about this for so many reasons because, first of all, the demographic realities in this space, obviously the volatility, and then the commoditization. I mean, the opportunity is perfect. You're so well positioned. So the first thing I'd like to do is just ask you right up front. Could you describe who your ideal client is, and then embed your value proposition into that answer?
Sure, absolutely. Duncan, we work with exclusively financial advisors in the wealth management industry. So my clients are firm owners, typically buyers and leaders of those firms, as well as their COOs and chief financial officers. But SkyView is a commercial finance company, and we were founded by my business partners and I, who are all experienced exclusively in the financial services industry. This is where we grew up. This is the industry we know. But one of the challenges that we saw, both in my old business and with my business partner, was the idea that there was not enough capital in this industry to fuel the growth and the acquisitions and the activity that this industry really required. And it was our mission to go out and seek solutions for financial advisors in the commercial financing space. So what we've done is built a network of banks and capital solutions lenders that can provide capital to financial advisors, and that can fuel your business acquisition, your internal succession, working capital needs. We're doing some merger levelizations, all sorts of interesting projects right now. And it's been a fantastic ride here in 2020. We're seeing a record year. M&A continues to be hot. And so it's been a very, very interesting time for us at SkyView. We feel very fortunate.
Well, you've got an incredible bench of very talented people. I guess my next question then on that point you made is that one of the silver linings of this bizarre disruption is that it has accelerated the desire for some people to either sell their business or feel compelled to go out and buy one?
Yeah, a couple of things. Both that and then interest rates have come down. So I'll address the last first, which is that we are proving that financial advisors are a good vertical for banks and other lenders to participate with. Financial advisors are cash flow based businesses, meaning there's no hard collateral. That's an industry that typically has a higher interest rate. So when we started out, we're proving that all of our clients have sustainable businesses with recurring revenue. We've managed to establish that through our underwriting and our mathematical strategies. But with the pandemic and the lowering of the interest rates, I think it's really met advisors at a point where the interest rates are acceptable, and it means that growth is cheaper than it ever has been. So that means that rates have stayed low. As rates have stayed low, the prices of businesses, much like the home real estate market, have started to escalate. So we've really seen the value of practices increase. We've seen the cost of borrowing come down, And so we've seen buyers willing to buy and sellers, in part because of fears around the pandemic, but also in the United States here as we go through a potential political changes, whether it's staying the same or changing. There's just turmoil, and so financial advisors are taking action now because there's so many events happening in one particular year.
So why would a financial advisor not DIY this? Why would they come to SkyView? What do they want from you specifically?
So, Duncan, the old way of doing things was that if you were selling a business, or let's say you're the buyer and you're buying a business, your financing was the seller. So we called that seller financing. And if I'm a seller, I'm going to receive payment for the value of my business over the course of maybe 3 to 5 years. That was the industry average of an interest rate around 3.5 to 5.5%. What we do is a 10-year amortization schedule on all of our business loans. So you really have double the amount of time to pay that back. And what that means for a buyer is increased cash flow and flexibility should there be any sort of market changes or any struggles or challenges with the acquisition of the business. But it really just brought the cost of capital down, and it made these much more affordable. So if I'm buying a business and I'm replacing a senior financial advisor, I have that much more cash flow to not only replace that individual, but invest in the business through marketing, through a business coach, through any strategy that I want to implement and capitalize on those additional clients that I've just purchased.
Okay, terrific. So let's go a little deeper on that. So beyond your technical ability and the reach of your network to accelerate the time in terms of making one of these transactions happen, what makes SkyView different and so incredibly compelling to both the seller and the buyer?
That's a great question. So a couple of things. I just had a meeting with my team yesterday, strategizing for the remaining of 2020 and into 2021 here. And what sets us apart is our customer service. At the end of the day, we're an entire team made up of industry professionals. We really strive to educate and help financial advisors through this commercial borrowing process. The majority of them have never done it before, and our job is to advocate for them and work as their agent through this process. But what is also important is we know the emotions of this industry when pertaining to the M&A marketplace, and we know what sellers are going through. And so we're able to communicate with sellers. We're able to make adjustments to deal structures to fit within bank financing. We are really working to create solutions. We're not making credit decisions at SkyView. At the end of the day, what we've done is we've built out a network of lenders. So it's our job to help understand the business financials of this enterprise and come up with solutions, whether it be 1, 2, or 3 solutions that we can have that are just going to solve their business challenge. And so that puts us in a unique position and something that I think the industry has needed for a long time. We're increasing the number of deals that can get done in this industry, but we're really providing with advisors with solutions to not only acquire the business, but have success beyond the acquisition, which is what I think is really important to continue to prove us as a vertical in the wealth management industry and to continue to see more success stories so we have more sellers and more opportunity.
That's a really big point, and not to downplay your comment about customer service, but what I've come to understand at SkyView is that you're very much process driven and you combine the art and science. So you understand the world of lending, you understand the financial services space, so you've got that X factor, but beyond that, you've invested every interaction with successes in the past into that process to accelerate and make the outcome predictable.
One of the things I think is most enjoyable about working with the wealth management industry is that this is a process-oriented business, right? Those that have really developed a process, that have built out their model and can replicate it, have tremendous success. And I enjoy speaking with advisors and learning about how they built that out. But it really provides us with an opportunity every time we speak with a client to improve upon our process. We continue to evaluate our systems, continue to try and make it more efficient for the borrower, and make it replicable, because the more clients we can help, the better. And at the end of the day, what we are finding is that we have a high application volume here. We've had over $500 million in loan opportunities come at us this year. And so it's very important for us to understand each practice, efficiently work with that borrower, and help them find the solution that they're looking for.
Yeah, and I've seen that firsthand. Is there any merit to this? Because what I've found is that the ideal business to acquire is a seller who's not just looking at this as a liquidity event. I mean, obviously, for many, this is their biggest asset.
Right.
That said, because they are planners at heart and they have a deep sense of calling and responsibility to their clients, that it's not just liquidity, legacy in terms of ensuring the clients are in good hands, and then for some, the concept of liberation. So if I'm an advisor, I'm not trying to necessarily get out immediately. I might hang around for a while and ride off to the sunset gradually, but
Right.
you want a balance between liquidity, legacy, and liberation. Do you see that too?
The seller I was just speaking to prior to this meeting was saying that, our clients are both friends and family, and those personal relationships were incredibly important to them. And so that's one of the things that we feel like was the opportunity that was really missing in the space. And so SkyView has come up with conventional commercial financing, which goes beyond the traditional SBA financing, meaning that we can keep the seller around for a longer period of time. But these are highly emotional transactions. There's a tremendous amount of opportunity post sale. And what we look to do is really guide these two parties through an emotional process and provide as much assurance as we can, because what we find is that, one of the most important factors is that buyer and seller post merger have a good relationship and a good partnership, because that's where we think the growth happens. And that's where the real success of proving financial advisors as a great borrowing solution it comes into light. And so that's what we love, talking to people like you who are out there helping advisors grow, create processes. We love to see the success post sale.
That's such a great point, because when the rubber hits the road and the selling advisor has to ultimately talk to those clients that they might have had for 20, 30 years, it can't be positioned as a transaction. This has to be positioned where the selling advisor says, look, I'm a planner at heart. We all knew this was coming. Continuity and succession has been a big part of my mindset and my process. I've done substantial due diligence to ensure that this transition and the impact on your client experience is actually elevated. And I love the way you bring that to life. And I think that's part of the uniqueness of SkyView, that bedside manner, for lack of a better analogy.
Absolutely. And what we find is that, with most of these businesses, because it so heavily weighs on the founder of the enterprise, that each business is unique and it takes on the personality of that founder. Every person has their own skill set and strengths. And so there are so many opportunities, I think, no matter how talented that seller was in terms of post-sale mergers, whether it's putting two parties together that can really drive the business forward and take some of the pressure off that seller, and creating new ways to service the clients through processes, through marketing, that we really like to see these people collaborate, have a good partnership. And one of the solutions that we can do to really relieve that pressure and that stress is provide secure financing, so that the seller knows that their business is essentially paid for. All they have to do is transition the client relationships. And then the buyer has the time and the opportunity and the cash flow to then go say, okay, I'm going to invest in the business, not just take on these clients and do what the previous owner was doing, but actually improve upon these things.
What percentage roughly of your clients are first-time buyers?
Boy, that's a great question. I don't have the specific statistic on that, but I would say, it's still probably 50%, 55%. We certainly see more and more people that have purchased several small businesses and they're growing towards that enterprise. But I would say it's 55% have never done a transaction, and certainly 100% of our sellers or 95% of them have never sold a business. So even if the buyer has some experience, that seller has never had that experience. And so we certainly need to manage that process and understand the emotion and really help the buyer work with that seller because it is their first experience.
Yeah. So, like the first time home buyer, how much
Mhm.
emphasis and how many people actually subscribe to the advice of talking to you well in advance of the moment of truth?
That's a great question. We're putting that education out there right now. So for all of these listeners, you may see some SkyView marketing as we go through 2021. We've certainly done a lot in 19 and 20. But we have a site that we've built out called the Advisory Practice Board of Exchange. And it's a marketplace, but really it's an education tool. And one of the things that we are really proud of is something we call purchasing power. And it's the idea that if you're a buyer, whether you have a specific transaction or whether you're thinking about a transaction, you can go get pre-qualified for financing. And so what we're doing is some light underwriting and some understanding of the business financials. We have an educational toolkit that buyers can use and resources to help them understand what it's required of them to be a business owner and to acquire that practice. Because the big thing about this is education. We really want to educate people on what it means to be a commercial borrower, the things that you need to do as a business owner. And the more prepared you are as that buyer, the easier this process is going to be and the more success you're going to have with these transactions.
And it's such a great exercise. I mean, part of our core is that we tell our clients to run their business like a business and move so far beyond their technical ability and core competency and place a great emphasis on practice management and relationship management. Now, I'm jumping ahead, but only because you referenced it early. How important is it for an enterprise to have a COO in place if they want to really take this growth through acquisition strategy seriously?
Oh, it's absolutely crucial, right? I mean, I can't stress it enough. In fact, I was just speaking to a buyer and putting him in touch with some solutions there for a turnkey CFO. One of the things that we find is that when you combine two practices, you've doubled your workload. You're probably going to add staff. You really are going from being potentially a solo practitioner with a few support staff into an enterprise. And it is absolutely crucial for people to start to delegate, outsource, and think like a enterprise owner. And for that matter, hire professionals around them to understand what is the value of my business today, what impacts my valuation and my business growth, and how can I improve upon this business and this enterprise. Those are things that we want to see each business owner taking on. Even if they haven't done it in the past, we certainly bring up these topics and have this conversation because I want to know, and this is what we always tell our team, we're managing to zero defaults. It's written on our office wall. So as my team goes about the business, what we're looking at doing is making sure that no borrower in this industry ever has such a financial challenge that they can no longer afford this business because we think we could damage the reputation of advisors everywhere. So it's crucially important for my team to understand the transaction and then work with that borrower and coach them and guide them into hiring or acquiring the solutions needed to really grow their business long term and have good success.
I hope everybody caught the energy and the intention in that statement. That only comes from a group with the pedigree, the experience in this industry. That's not something you can make up or be theoretical about. That has to be part of your fiber, part of who you are.
Both my business partners and I were consultants in this industry, prior to it. So we've obviously worked with hundreds of business owners over the years. I get energy out of working with those businesses and seeing them grow. I know you guys do. And that's what's really fun. We really like making an impact on people's lives in a positive way. It's incredibly rewarding as a professional and as a profession and to grow a business. And so how could you not get excited about it?
Absolutely. And yeah, you and I have talked about this offline before, but I'm curious if you'd like to share some examples of unintended consequences or benefits that have come out of somebody entering into the world of growth through acquisition? I've got a couple of my own, but I'll let you kick it off.
Yeah, I mean, we see a number of things. It's always a great opportunity to understand one's own business value and do an assessment of what's going to drive them forward over the next decade, right? We're doing a 10-year amortization schedule, and I want that business owner to start thinking in tranches of 10, just like we are. And so it's a great opportunity to assess where they are today, understand what drives value, put into place the tools and resources that are going to grow that enterprise, and make those decisions as you're really about to tackle a large project and a large workload. And the benefit to it is a number of things. I think that as a business owner, the more you construct an enterprise, the easier it is for you to grow the business, but not overwhelm yourself from a workload standpoint. It impacts your value and your legacy. And I think it breeds opportunity. The more successful you are in building out that enterprise and creating a successful merger, a successful acquisition, the more sellers are going to hear about that. And these sellers talk, these advisors understand and see who's around in their community. The majority of transactions happen within a 10-mile radius of that seller. And so the more that you are building an enterprise and demonstrating your value, the more opportunities are just going to absolutely come out of the woodwork. Sellers approaching you, better employees that want to work for you, more clients coming into it. I mean, you could go on and on, Duncan. It's really amazing to watch these businesses thrive.
Well, yeah, absolutely. And as you're speaking, I can tell there's a theme of sort of begin with the end in mind, right? Like, where is this all going? The first one's a proof of concept. Let's professionalize and standardize it, and then make number two even better if you decide to go through this a second or third time or more. What's interesting for me, and this is from my perspective, the people that trivialize the importance of best practices, the multipliers. So the financial windfall multipliers, 1 + 1 = 1.5. And the workload multiplier, 1 + 1 = 3.5.
Yeah, absolutely.
If they just sort of wing it. And that's why I like our collaboration, because we're hand in glove. Because the one thing you said, which is so powerful, is that an enlightened business owner will outsource and stay in their lane and align themselves with talent to basically buy them time to focus on what they enjoy doing and what they're good at doing. But I'm really interested in your perspective, and you've already touched on it, but if you want to elaborate on those multipliers, because the one that really gets me, and I see this, I'm sure you do too, is the acquiring enterprise buys a business with 100 million AUM.
Right.
They pay their multiples and the dust settles, and then they reframe and re-onboard those clients and start to future pace and position what it all means to those clients. And within 12 months, that's now a $130 million business that they acquired. And there's incredible lift in every aspect of the business. Do you see that as well?
I talk to buyers all the time, and obviously, I'm an emotional coach, for both the buyer and the seller. You're convincing the seller that they're making the right transaction and they should continue through the process, but you're also working with that buyer and saying, yeah, this is the right thing to do. You're taking on a significant amount of business risk and debt and workload, but at the end of the day, this is the goal that you've been driving for the last 20 years. And one of the things that I say is focus less on the price today and more on the enterprise value tomorrow. And by tomorrow, I mean at the time that this is paid off. So if you're paying this business over 10 years, it really doesn't matter if you pay an extra 100,000 or 200,000 on that $100 million business. You've more than doubled the value, Duncan, by the time you've paid off this loan. As you point out, what we see is the majority of the growth really happens in that first couple of years. I always say anecdotally, we see 95 to 100% client retention in an acquisition and 100 to 110% asset retention. Existing clients with new money come back to the table because there's a legacy plan. Clients that have been, around for a long time are excited for the owner. They have conversations around it. They bring in more clients. It is a self-fulfilling prophecy of growth. And so it's really a fantastic opportunity. And for those that are buyers, it's less about what is happening today and more about what you can do with this enterprise when you're hiring the right professionals, when you're hiring the right business coach to build it out.
Can I get you to repeat that mantra about focusing on value again? Can I hear that again?
Yeah, so I say focus less on what your value is today and more what it is tomorrow. And by tomorrow, I mean 10 years. What is the business going to be worth 10 years from now? What is the business going to be worth 20 years from now when you want to retire? Yeah.
Yeah. Well, and that's an interesting component in and of itself, is that every business is built to be sold. Even one that's acquiring is going to have an event sometime down the road. So do you see that just by virtue of the exercise of acquiring a business and just expanding your thinking and going through that actually seeps into the existing organic business and raises that side of the business?
Oh, there's no question about it. And we have the discussion with almost every client is, not only are you financing the existing business and the acquisition, but oftentimes we can roll in some working capital, whether it's paying off a business broker. But what I encourage all of my clients to do is go out and hire a professional coach and help them understand and build goals for the business for the long term. That's what I really want to see, is that these enterprises continue to grow. But I really think it requires the accountability of an outside professional. And I mean, if you look at the majority of our best borrowers, and by those borrowers, I mean people that have successfully acquired a business or two, they have sufficient cash flow, and I consider them to have a good interest rate because of that cash flow, because they can afford the risks associated with the market and the downturn in revenue. It's all because they think about the enterprise. They're continually working on their craft. And I would say 8 out of 10 times, if not 9 out of 10 times, those business owners have some outside accountability partner, a business coach, an expert that they're relying on, in addition to any peer networking groups that they have. I love all of those things within an organization.
Well, everybody listening in, you can tell we're only scratching the surface, but I mean, you could run with this for hours. So I want to cover off two last things before we wrap up, and part of that will be the call to action where people can go afterwards to dig in a little bit further. You talk about valuation, and you look at both sides of the coin or both sides of the equation. I'm putting you on the spot here. So your sort of mental checklist of things that drive valuation beyond AUM and the self-evident. What are some of those factors?
Oh, yeah. I think for the most part, the biggest things that I really like to see are process, client onboarding process, client servicing process, systematic meetings in a given year. And then really it's about managing staff. I think that's an often overlooked challenge with entrepreneurs. Entrepreneurs are not typically the greatest at managing staff or building out an enterprise from a personnel level. And to me, the firms that have engaged, empowered, well-trained staff really make a difference in the enterprise. And I always encourage clients and advisors, if they haven't done it, every business owner, every financial advisor should be going and getting a very good quality annual valuation, because it really does dive into what the opportunities, what the strengths and weaknesses are. And in my opinion, every financial advisor that really wants to build enterprise value should have an outside peer coach. And you should look at that valuation annually with your peer coach and decide, what is it that I want to accomplish in 2021? How do I improve upon the numbers today? Valuations are not a tool for sellers. Valuations are a tool for growers and business owners that want to understand where they are today and how to improve. I don't care if you ignore the valuation part of it, but how can you improve upon what you're doing today from a client service standpoint, and how can you get better at your craft?
Yeah. Two of the most thought-provoking pieces that you put on the table in previous conversations with me, you talked about demography of the clients.
Sure.
And I think the penetration into next gen. So, I'll let you expand on that quickly, and then also growth versus market growth. That's a very interesting insight as well. So why don't you run with that?
Yeah, so I spent 3.5 years serving heavily in the Financial Planning Association board of directors. And one of the holes I saw as a young business owner in an aging industry was that transfer of power or a wealth from one generation to the next. And we still have a gap there. We still have an opportunity for business owners to not only connect with the senior members of an organization or of a family, but then how do you retain that wealth over time and over the next generation? And what that means to me is not I'm a 60-year-old owner and I can once a year, once every 2 years, have a meeting with a 30-year-old offspring of my client. But how do I have a genuine connection, a genuine and defined service model for that next generation that's inheriting the wealth, and someone on my team that's going to connect with them on a peer level? That is where the majority of businesses today can improve without a doubt. I would say that's our number one weakness in the industry, is helping understand that generational transfer. I'm very passionate about that. We are in an industry that continues to decrease in numbers. We've lost some of the traditional training programs that are out there. And so it's up to entrepreneurs and business owners today to build out a process that's replicable and then go and be able to hire the personnel. And the better process you have within your organization, the easier it is to bring good personnel and good talent into your organization to continue to grow it. So that's a huge hot button for me, and I really am passionate about that. We are building out some working capital solutions at SkyView to serve that need. So I really like to see that. And, I always think that there's a definitive opportunity to understand your next generation and think about, what am I going to do, current business owner, in retirement, and how do I bring my talent and my organization such that I can empower them to buy my business if I choose to? So it really is about understanding where I'm at today, what my retirement vision is, and what my career goals are, and then being able to groom that next generation, whether it's internally or externally. That it's just like saving for retirement, as we talk about to individual clients every day. The more prepared we are, the more options we have when it comes time for that legacy. You could get me started on that, and I could go on for hours. Yeah.
Well, I know you could. And so on that point, let's wind down. I want to make it crystal clear in terms of what the next steps and where somebody can go from here to get to know you. You've actually inspired some comments that I'm going to make later in the summit here that are not entirely obvious, but are absolutely non-optional in terms of application. So thanks for that. I'm not 100% convinced that that's not a green screen behind you and you're like on a boat on the lake somewhere. But I know your house is noisy, and that's basically as quiet as it gets, right?
I tell you what, it's a place of incredible peace and focus down here, right? In spite of the camping equipment, ski boots behind me, it is a fantastic place to get work done. Thank goodness for Zoom and some of the other solutions we've created today. But I think these are, what an interesting time and what opportunity we've had in our world to go and connect with clients. As we found at SkyView, it's been a whole new experience for everybody to be working remotely and come up with creative ways to connect with our clients. We've really enjoyed the challenges, and we've really enjoyed helping people. And so what we do and what we focus on is, if people go to skyview.com, we have an education page, and that's where we have a lot of the materials on what borrowers can be doing today, some of the podcasts and the information that we're putting out, the articles that we've been writing or getting out there and being quoted in, so that people can understand those resources. And then I want people to Google or go to the Advisory Practice Board of Exchange, or APBOE. We had a great time with that. It's got a 80s New York Stock Exchange feel to it. And it's a fun site and a fun tool to explore. Sign on there for your purchasing power. And you can take actionable steps in your business on how to identify yourself as a buyer, how to assess your credit worthiness for making an acquisition. And then I think it'll give those business owners a real opportunity for self-reflection. What have I done here? How can I increase my score? One of the factors that we have for increasing scores is having a professional coach and building out some of the necessary tools that are going to grow their organization, and that impacts their score. So we want people to go in and understand that, and one of our buyer coaches will help them understand how to increase their purchasing power score. And ultimately, that goal of a purchasing power score is to build trust in the aging advisor community that 100% financing is available out there. There's security in these transactions when they want to retire. Let's go out and have those conversations. Let's encourage business owners to think about their own legacy. We all benefit. The sellers benefit, the buyers benefit, the clients benefit. It's an incredibly positive experience if done correctly.
Yeah, well said, Aaron. And also on LinkedIn, I know I have some interactions with your crew there, and you're very well-rounded. So I'm sure everybody can see that in this conversation. So I'm sure we're going to talk again in another format like this, but I just want to say thank you very much for joining Foresight from 2020. The whole premise here, again, is to not get through this, but to get from this and let it serve us heading into the future. So, Aaron, thanks very much for your time.
Thanks very much, Duncan. Really appreciate being here.
Pleasure.